market. What did you make of the session?
James, I think today was important for me because yesterday we saw those flash PMI numbers from China. They were at an 8-month low, and yet the market really rallied on the back of expectations around stimulus. Overnight, though, we saw a negative reaction from overseas markets. So today the test was really in Asia, and it looks like we passed with flying colours. The Australian market was down by 0.2%, but nowhere near as bearish as the opening calls and the SPI futures suggested this morning. One thing that helped our market was the fact that we saw the Shanghai Composite turning positive. So that was a help to our market, especially the materials space. But if we have a look at the market, it was still in a risk-off mode. The Australian market down by 0.2%. But if we have a look at the mid-cap index, that was down by 0.6%, and then the small-cap index was down by 1.1%, while the top 20 blue chips on the market actually ended in the black. So it does look like investors still very cautious, very risk-averse in terms of the market, and once again the defensive sectors in focus, and the ones that were doing well were the staples and the telecommunications area. So all in all, a pretty good day for the Australian market, but it does look like investors still remaining on the defensive.
And I suppose forcing people to more actively manage a portfolio as opposed to just buy and hold for, a number of years.
Well, it's a bit of a tug-of-war at the moment because in terms of Australian earnings, the picture is much brighter than we've seen in the past 3 years. And this earnings season, February was a great month for the Australian share market. But what we've found is that it's external factors which are really driving the sentiment on the market at the moment. And I guess the top 3 concerns that investors have, probably in this order at the moment for the Australian market, are the jitters around China, the corporate defaults that are happening, what we're seeing around the wealth management products, as well as the tightening that we're seeing. Secondly, as Jeremy mentioned, what's happening in terms of the US and the unwinding of quantitative easing. And thirdly, the geopolitical concerns, while they've faded to the background, they're still bubbling away over there. So they're probably the top 3 concerns. And when we look at those top 3 concerns, none of them are domestic based. If we have a look at the earnings picture, things are looking pretty good. I mean, even today we heard from Premier Investments, we heard from TPG, we saw Australand also increasing its forecast. We're seeing companies on the Australian market making acquisitions, Automated Holdings going into a trading halt, making 2 acquisitions there. We're hearing a lot of talk about merger and acquisition activities, and all this is a sign of a healthy market. So domestically, things are looking pretty good, but it's the external factors which are weighing on sentiment at the moment.
In regard speculation around a potential move on IINet?
Absolutely. I think the smaller telco space is a very interesting space, and it has been for a number of years. It's a very mature market, and we've seen massive amounts of consolidation with those smaller internet service providers, and now we're watching IINet and TPG Telecom. Now, if we have a look at TPG's stake in IINet, it made this stake around about 4 years ago, where it popped up as a substantial shareholder for IINet. But one of the problems with TPG getting a real foothold into IINet is that around about 30% of shares were owned by IINet shareholders, including CEO Michael Malone. Now, we know that Michael Malone and some of the directors have been selling down some of their stakes over the last 6 months, which has opened up the share register a little bit. And we also know that our founder and CEO Michael Malone stepping down as CEO. So it's really getting quite interesting. If we have a look at TPG, we know that they've been aggressive in terms of the acquisition trail, but the other part of the business which is quite interesting is the rolling out of fibre. And this is interesting because the whole concept of the NBN is that it would be the wholesaler, and then you would see retailers like Telstra, IINet and TPG on selling the product. But if TPG can get a hold in that wholesale market and not compete against the NBN, well, that would be an edge that it would have against some of the other internet service providers out there in the market. So TPG, fantastic result, fantastic upgrade, great share price performance, and just watching IINet as well.
Good news.